Let's get more reaction to Lyft's quarter. Loup Ventures Gene Munster has been listening in on the company's call. Gene, what'd you make of the quarter so far?
Also impressed with Tim's comments that growth, they really exited at 10% growth in revenue. Down 75% is what Deidre talked about, but also they pointed out that there's been in 8 cities 30% growth week on week. So really some impressive bounce back. This management team is a bunch of assassins, and that's the part that's really jumped out on the earnings call, is they have an opportunity. They have a platform here that is in dire need of cash. Business is down dramatically. They could start chasing shiny things like Uber does, other types of use case, for example, food delivery. Instead, the company is taking this very long-term approach and is sticking with ride sharing in the U.S. predominantly, which is absolutely the right thing for them to do. Don't try to replicate what Uber is doing. So they said on the earnings call that they will not be getting into food delivery. The other piece is how they are capitalizing on this opportunity in very strong language, but the essence is that they're cutting costs by about $500 million per year, $200 million in CapEx and $300 million in OpEx. And so what that means is that about 35% of their 5,000 or so employees have either been let go or had a pay cut, and they've cut, as I mentioned, CapEx dramatically. That, to me, is assassin-like approach to this, is to try to use this as an opportunity to really streamline their business. I have been a long believer in the future of ride sharing as a service and the importance of that as we move forward. An undeniable truth. I have been very concerned going into tonight's print about the company's ability to weather this storm. This could go on for a year plus. But coming and halfway through the earnings call here, Melissa, I've been really impressed. And when you put it all together, this is now about an $8 or $9 billion market cap. It feels like for someone who actually invests, not speculates, but can invest over the long term, this seems like a good one to own.
At the same time, Gene, you mentioned all the different cuts that they are willing to make. If this does persist, or if rideshare doesn't snap back, because let's say people would rather actually have cars in the post-pandemic world because they feel safer being in their own environment as opposed to jumping into a black Honda Civic. How long can this company persist in that sort of world?
So they have $2.7 billion in cash today. They were net cash neutral. They're going to burn a little bit in the June quarter, probably call it a couple $100 million. But to answer your questions, they can sustain a year and a half, 2 years of virtually of almost no revenue. 2/3 of their costs are variable. That is an incredibly asset-light type of a business. And so they can sustain and kind of wait this out. Undoubtedly, people are going to exit this and want to feel more safe in a car. People who have maybe leaned a little bit more on ride sharing may lean less on that. But I think if you look at this arc over a 5-year period, we're still moving into a world where people don't want to have ownership. I think that will still be a truth on the other side of this. So it's a headwind. It all is in this broader category. Investors need just to separate themselves with any of the metrics, whether it's Lyft or Uber, and just look at the cash position and their brand within the marketplace.
Gene, thank you. Always good to hear from you. Gene Munster of Loup Ventures. That is stunning that they could operate basically not taking anything in for the next year, 2 years. Steve Grasso, as the #1 germaphobe on this panel, I go to you in terms of how you think about the post-pandemic world and the future of rideshare.
So I think it's going to be in stages. No one's getting back on mass transit in the first stage of when the economy starts. So I think people might try out or get back to the Uber or the Lyfts, and then they might migrate and say, I don't want to be in the back of a car, like you just said, and maybe I'll buy a car. But as far as Lyft has been the laggard, so I would expect this one to bounce further than Uber. But Uber has been the name, the best in breed name. I wouldn't chase this. Tim said it before. I wouldn't chase Lyft at these levels. It's got to hold the 50-day, so roughly around 29 and a nickel. But the recent high has been $35. So you still have to trade up 15% to avoid just a lower high. So I would wait here. You're sort of in no man's territory here. If you want to buy it, nibble, make sure it holds 29. If you want to wait until it trades above 35 and holds that level to be a buyer of Lyft longer term.